Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on the Wednesday of the 22nd of August, 2018. Thanks for joining me for another Trader Bite. Reminder to all, choose to select from the bottom right corner of your screen if you have the little settings wheel. Choose to watch this in 1080p. If you have the bandwidth, it's easier to read the numbers and to get a clearer image, because I'm broadcasting in high definition. Anyway, thanks for joining me again this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk allocation, the market sentiment is towards safety. Crude, however, is bucking the trend, up 2%. Crude up 2%, trading up $1.30 at 67.15 in the October futures contract. The laggard today is the dollar, down 29.5 cents, 0.31. All of the equity indices in the U.S. Are down, plus the DAX is down marginally, just 0.08%. But the Russell is the leader on the downside, or is the laggard really, down 3 points. Now, yes, the Russell, S&P, NASDAQ, and Dow are all down, but they're down just marginally. I mean, 25 points at the DAX, that's a little over one rotation to bring it back to unched on the day. So the range of being down is 0.1 to 0.17%, tiny. However, it looks like we're trending in that direction. As far as what might interrupt our day, we do have existing home sales in the U.S. For July, expecting 5.4, prior is 5.4, so pay attention to that. That could be a mover. And of course, crude oil inventories, distillates and gasoline at 10:30 Eastern today. Crude oil inventories expecting a draw of 2 million. And then this afternoon, we get into the FOMC meeting minutes at 2 o'clock Eastern. So again, pay attention to that. Other than that, it's market's under its own power. Let's move on to what I posted yesterday. Now, remember yesterday, the Trader Bite had to be pre-recorded. I don't know what this big logo is here on the screen when I pre-recorded. No idea. Not sure why I plopped it in there. I haven't seen that before, but we could still see what we need to see. This was pre-recorded fairly early, around 6 a.m. Chicago time or so, and so things changed slightly by the time the market had opened, but not enough to change the overall scenarios. As you can see, 1 and 2 were incorrect, or premature, so to speak, in that both sides expected to test the overnight high, get into 2666 or so, and then return into the prior range. The reason for that is we had a trend day up, we had a rest day, and an opening higher is more likely to give us a reverting, balancing, consolidating day than it is to give us another trend day up. So these were both incorrect. The way the market actually traded is right here. We opened up in a gap higher at 63.5, and we saw that the opening swing low only had 3 ticks to make it, and it immediately pushed towards 2870, consolidated. So 2870 was the stock zone previously, consolidated, created an opportunity, at least for me, to fade the gap and go. Remember, this is initiative buying. So what we have here is a gap and then a strong rotation on the buy side. You can see the rotation is 6.5 points down here. Strong rotation on the buy side. And what happened here, and I posted this as I was narrating this trade and the setup, I posted the volume scope and all that to show how these tests on this high against a stock zone, which by definition is an area for me to do business, an area for me to engage, predetermined area, came in weaker. So I was looking for it to rotate down to the open initially and then potentially to fill the gap. So the key area yesterday that I wanted to monitor was 62 below. 62 is a key area for engagement, and that's what I was aiming for on that short setup. It got within a couple ticks of the open and off to the races it goes the other way, and then we ended up having the biggest rotation of the day, 8.5 points up without a single 7-tick pullback. So that ended that idea. Then the market travels to 73.5, which again is a predetermined stock zone up top. And again, we see it pushing, pulling back, weaker retest, and it drifts down, sets us up for another short. Again, I'm fading. Remember, these shorts, although taken, are going against the overall grain of the market, the overall trend. So you have to put these things in perspective in that the shorts are going to be tight. So you're fading the overall push of the market. So you're going to want to scale out sooner and potentially trade smaller, trade half a unit, quarter unit, whatever if you can. And so since I did not have anything to go by to get long in my plan, in my view, in my time frame, I'm sure other people have guessed the low many times and got long way ahead of me. But that's how I trade, and then bring it back to mid, expecting the mid and the IB area to hold, expecting it to bounce back up and retest that high. Could not, and it ended up going neutral. So we extended the range up right there. We extended the range down right there. We have a neutral day, and then we closed at the extreme. Now, we didn't push that neutral low very far, but this is by definition a neutral extreme down day. What do we expect on a neutral extreme down day? That's right. Okay, there's too much of a delay to wait for your answer. That's right. We expect it to continue lower into the extended trading hours and to take out the low of the neutral extreme. Why? Because on a neutral extreme, what the market is basically saying is we are still exploring in that direction, but time interrupted the auction. Time, the end of the session interrupted the auction. This chart here shows only RTH, as you can see in Chicago time, right here, 8:30 to 3:15. Those are the pit hours. And so the auction was interrupted, so the market is likely to continue to explore prices lower to find those buyers because that's its job. It's doing its job. So neutral extreme, expect the market to explore lower. The market did explore lower. It went as far down as 28.46 and a quarter on the overnight low. Lots of political news yesterday during the session and following that, and U.S. President on Twitter this morning ranting about how terrible his lawyer was and so on and so forth. I guess that guy's not going to get a pardon. And so that's risk, that's instability, right? The president's at risk of being pulled in on a legal matter. So, so that's what the market is responding to. The overall view, though, is that the high we left behind yesterday was pretty poor. It's a weak high. It's not really an excess. We are likely to see ourselves back up here in the not too distant future. Okay, and overall, the tempo has moved. Whereas we had a gap and go, so this was a gap zone this morning. We had a gap and go run, which really sets us up for a strong potential for a trend day. We ended up failing and pushing through the mid and going neutral and pushing down. So where we are now is this is a new profile that I generated. Let me shift this forward. This profile basically takes us from the 816 gap okay, the 816 gap, and explores where volume has taken place. Now, this is not just some weird lines. These are volumes. Look at these numbers. You can see up and down that the point of control had 57,182 contracts. That is correct to the tick. I'm using tick data to generate these volumes, and we could see that the pattern, the histogram, if flip this on its, rotate this counterclockwise 90 degrees, and what you have here is a statistical histogram of the number of events at each price, the quantity at each price, just like you would with a statistical study. And so that's what volume profiling is about, right? We're looking at things more set up more in a statistical way. And that profile, this composite, this composite here, this composite shows that the area we're trading right now is the point of control given the entire range above the gap. And why am I putting this composite, this micro composite in here now? I'm putting it in because we are rotating back on ourselves. As soon as the market rotates back on itself, I go back and I look at where this last run has started from. So it's either a low, a swing low, or a gap low, and then if it goes through the gap, I extend back to the swing low, and so on and so forth. And the goal is to look at combined, this whole area combined, where did we like prices? Where did we like prices? Where did we not? And the way we determine that is by volume, because volume is the force, right? Price is the direction, is the advertisement, um, is the in a vortex, it is the direction, and then the volume is the force. It tells you how much of that price we like or didn't like. And of course, price action is just the direction of that force. Is it lower highs, lower lows, trending down, higher highs, higher lows, trending up, and so on and so forth. That's just a quick crash course in VP and why it's important to me, and I believe it should be to you. But where are we? We are right on top of the point of control right now. The S&P is trading 28.58 and a quarter, right on top of the point of control. We have a low volume node above us. We have a very important low volume node below us. Both of those are stock zones. 28.43 and 28.62 are the necklines. And so when the market moves up through this low volume node, then we expect the next high volume node, which is right here, which is yesterday's point of control, to be the next area to test. So if the market happens to break through and push through this low volume node here at 28.61 or so, then I'm expecting it to retest 28.6750. So I need to hold on. That's the impetus for me to hold on to that trade versus, oh, 2 ticks in my direction, let me get out and see what happens because I can't stand taking risk, that sort of stuff. So that's the point of this trader bite. That's the point of looking at this and looking at context and the narrative and prepping. Okay. Overall, the trend is still intact. Okay. Today, we're likely to break this this one-time framing up. So we've had one-time framing up all along for several days, for about a week or so. Actually, the low is right here. So we're getting higher lows, higher lows, higher lows. So by definition, we're one-time framing up. And today that comes to an end. Generally, when that comes to an end, when we have a rotation in one-time framing up or down, generally we get a balanced day. And then the following day gives us whatever move the market makes next. So what am I looking for in terms of range? The range for today, 28.4850 to 28.61, 28.62. So I'm expecting us to play in here, and if it pushes out above 62, I'm expecting at least to test the point of control that becomes a magnet. If we push below the 48.50, then I'm expecting it to work its way down because this is a very crowded area here. I'm expecting it to work its way down to 41 and a quarter and a strong potential to take out this double bottom we left behind at 28 35 and a quarter. 28.35 and a quarter becomes very, very likely given the double bottom and the gap below. That's how things are setting up. Okay, so looking at the overnight, remember yesterday actually we had okay volume, 882,000 versus 1100,000 or 1.1 million. This morning, the overnight session was very well participated, 252,000. We pushed straight down and have been lingering in the middle here, holding the mid. Go away. Bye. Holding the mid. So we've had our impulsive test down. We've pulled all the way through, held the mid, and we're holding sideways. The overall profile overnight shows some consensus on price in the middle here at 28.55, right on top of the 28.58 for the MC point of control. So we're in an inflection area right now, giving us putting us in a precarious kind of position. But overall, given the overnight action, the expectation the expectation is we are likely to test upwards first. So we're likely to be responsive this morning. The primary expectation, we're opening right on top of a stock zone, right on top of the point of control. If there's any drift downwards at all, it is likely to push us into 28.55, 54. I'm looking for an impulse up, and I'm looking for the market to be responsive into the 62, consolidate at the 62, and then your call is as good as mine every time, but it could fail from there or it could continue higher. But I'm expecting it to push into the overnight high and into this 28.62 this morning as the primary idea. The secondary idea is an open auction that tests, that gets responsive early, gets rejection, so we find ourselves in an impulse down. So you got to pay attention to these rotations. And then it starts to drift down and get through 28.51.50, bounce back up, and then we're looking for it to start working its way through these areas here, consolidation on the LVN, and start moving towards the lower end of the range. Scenario 2 offers much greater opportunity, in my opinion, than scenario 1, but both are opening up right on top of the point of control, the MC point of control, and are likely to give us a pretty good drift up or down. So pay attention. Another day where I'm probably not going to trade for the first 10 or 15 minutes, see what the market's intention is, and then see which side is dominant. How do I know which side is dominant? Look at your rotation values. How is it rotating up? How easily is it rotating up versus down? Which way is delta moving? Is price being facilitated more easily to the upside? You're getting strong delta with strong price movement up, or are you getting a strong delta with strong movement down, or are you getting a strong delta with price not moving higher, which is likely to exhaust buyers and create an opportunity to get short, which is, for this morning, that's my preference, and that's what I'm looking for. Okay, that's the secret sauce. Anyway, I'll leave you with that. Convergent members, we're doing our live trader audit this morning with NYJ Barnes at in 10 minutes. 10 minutes. You have the link in the notice board on chat. You also received it by email. We're going to look over the shoulder of this trader and see if we can identify what issues he has in the live market trading live. Good luck. Take care.